Imagine a world without money. How would you buy bread? Maybe you'd trade a chicken for it. But what if the baker doesn't want a chicken? This was the challenge faced by ancient civilizations. People needed something everyone agreed was valuable: money. Long before paper bills, societies from Mesopotamia to Egypt used gold and silver as trusted mediums of exchange. For thousands of years, gold and silver became that answer. The first known gold coins were minted in Lydia in modern-day Turkey, around 600 BC. Silver coins soon followed, spreading across Greece, Persia, and beyond. Gold and silver don't rust or decay. Their shine and rarity made them symbols of wealth and power in cultures from the pharaohs of Egypt to the emperors of Rome. Standardized coins guaranteed weight and purity, making trade faster and safer. Merchants could travel the Silk Road or sail the Mediterranean, confident their coins would be accepted far from home. Gold and silver became the ultimate symbols of lasting value, echoing through millennia. Their legacy is woven into myths, royal treasures, and the rise and fall of empires. About 2,700 years ago in Lydia, the first coins appeared, stamped with the king symbol, a promise of value. These coins changed everything for ancient societies. No more scales, just count the coins. Suddenly trade became faster, markets grew, and trust in transactions soared. The idea spread. Greeks, Persians, Romans all minted their own. Some coins, like Athens' silver owl or Rome's denarius, became legendary, trusted far beyond their borders. Coins became tools of trade and symbols of power, stamped with rulers' faces: Alexander the Great, Cleopatra, and emperors who shaped history. Gold coins for big deals, silver for daily life, a two-metal system that fueled economies and connected distant lands. But rulers melted coins, added cheap metal, and made more money. This is debasement. The Romans famously reduced the silver in their denarius, while others clipped the edges or mixed in copper. Soon, coins had less precious metal and were worth less. In England, clipped coins led to chaos. In Byzantium, debasement weakened empires. Prices rose, trust fell. This is inflation. Merchants demanded more coins for the same goods, and people lost faith in their money. The lesson: money's value isn't just in the metal, but in the trust behind it. Famous coins like the Athenian owl or the Roman aureus were prized because people believed in them. This lesson is as true today as it was in ancient times. The story of coins is the story of trust, power, and the rise and fall of kingdoms. The value of money is built on belief. Belief that can unite empires or bring them to their knees. And that belief can be fragile, as history's most famous coins remind us. After Rome, gold and silver coins kept trade alive. In the 1500s, European explorers brought back mountains of silver from the Americas. Suddenly, silver's value dropped and prices soared, showing how money supply shapes economies. To stabilize their economies, many nations adopted the bimetallic standard, money backed by both gold and silver. But as global trade expanded, fluctuations in silver's price led people to exchange silver for gold, draining gold reserves and causing instability. By the 1800s, countries like Britain, Germany, and later Japan and the United States shifted to the gold standard, tying their currencies directly to gold and abandoning silver. Under this system, you could exchange paper bills for real gold at the bank, creating a sense of security and trust. The gold standard made international trade safer and more predictable, as exchange rates were fixed and currencies were trusted worldwide. Global trade boomed, with countries across Europe, the Americas, and Asia building their economies on the reliability of gold. But the gold standard had strict limits. Nations could only print as much money as they had gold, restricting their ability to respond to crises. In tough times like wars or economic downturns, governments couldn't create more money to help people or stimulate growth. During the Great Depression, this inflexibility became a global problem, deepening economic pain in the US, Europe, and beyond. One by one, countries abandoned gold, seeking more control over their economies and the ability to recover from crisis. In 1971, the US ended gold convertibility, and the world fully left the gold standard behind. The age of gold-backed money was over, and nations moved to fiat currencies. Now money was based on trust in governments and central banks, not on precious metals. The rise and fall of the gold standard shaped the global economy, influencing how nations manage money in crises today. its legacy still echoes in debates about value, stability, and the future of money worldwide. Today, no country uses gold or silver as official money. Our dollars and euros are fiat money, valuable because we trust the system, not because of metal in a vault. This system is flexible, but it relies entirely on faith in governments and economies. So why do people still buy gold and silver? Today, investors have more options than ever. Physical bars, coins, ETFs, and even digital gold. For thousands of years, they were the ultimate store of value, and many still see them that way, especially with new technology making access easier. In uncertain times, like the 2008 financial crisis or the 2020 pandemic, demand for gold and silver surges as people seek financial insurance. They're seen as real, tangible wealth, outside government control. The gold-silver ratio is still watched by investors, reflecting economic fears and hopes. Gold and silver remain powerful symbols of security. Experts say that as global uncertainty grows, precious metals could play an even bigger role in portfolios. Some predict gold will remain a hedge against inflation and currency risk, while others see silver's industrial uses boosting its value. Even if they're not in our wallets, they're in our minds. In times of uncertainty, people turn to these timeless elements. They connect us to our economic past, and for many they're a safeguard for the future. Gold and silver's legacy endures, reminding us that trust is the foundation of all money, and that in a changing world, their value continues to evolve. As we look ahead, these metals remain a bridge between our history and our future, symbols of security and resilience. If you found this video insightful, don't forget to subscribe for more content on timeless investments. Share this with friends who want to learn about gold and silver, and check out the links below to dive deeper into the world of precious metals. Your journey to understanding real value starts here.